We now start off with the World Bank, which says that import restrictions and non-flexible exchange rate management of the Central Bank of Nigeria are the major driving forces for food inflation in the country. The Washington-based bank, in its new biannual report, shows that current foreign exchange regime is keeping the official exchange rate of the naira artificially strong, while the naira has weakened significantly on the parallel market, adding that the restricted importers' access to foreign currency for fortified products and has also reduced the supply to other importers. According to the bank, food and fuel shortages weigh on consumer prices, despite fuel subsidies, adding that the war in Ukraine would also likely worsen inflation rates in the coming months. Recent figures from the National Bureau of Statistics shows that consumer price index rose to 15.92% in the month of March, the highest the country has recorded since November 2021, when the inflation rate dropped to 15.99%. The rise in inflation rate in March shows that Nigeria is not left out in the global inflation surge currently being witnessed. And now, Nigeria's external reserves rose by $243.83 million in more than 2 weeks, and that's according to the latest report as well from the Central Bank of Nigeria. The Apex Bank, in its data on movement and reserves, shows that the value rose from $39.54 billion as of the 1st of this month to hit $39.78 billion by the 19th of the month. Now, according to the report, external reserves fell by $313 million in the month of March after starting the month at $39.86 billion before falling to $39.55 billion by the 30th of March. The governor of the Apex Bank, Godwin Emefiele, also attributes the moderate accretion to reserves, reflecting the duality of Nigeria's position as an oil exporter and importer of refined petroleum products. In this next report, the shortfall in electricity tariff paid by consumers across the country to power distribution companies has dropped from 1.89 trillion naira to hit 247 billion naira. That's according to the federal government fact sheet on the Power Sector Recovery Program. The PSRP is a program initiated by the federal government with the support of the World Bank to ensure that Nigerians have access to adequate, reliable and affordable electricity. According to the report, tariff shortfall was reduced through the implementation of the PSRP financing plan that was also approved in November last year. The report also adds that the federal government has also approved and put into operation the performance improvement plans for power distribution companies to ensure that DISCOs implement service improvements with measurable indicators, as this would help track the quality of service improvements by DISCOs and will be monitored by the Nigerian Electricity Regulatory Commission. And I'll bring you the latest from the international front. Mainland China and Hong Kong stocks fell today, hurt by worries about the Chinese economy. But an overnight tumble in longer-dated US Treasury yields lent support to other benchmark indexes. A 0.78% drop for Hong Kong and a 0.36% drop for the blue chip CSI 300 in mainland China pulled the MSCI's products index of Asia Pacific shares outside Japan 0.22% lower. But share benchmarks in Australia and Korea were up, and Japan's Nikkei rose 0.81%. Nasdaq futures gained about 0.6%, with the S&P 500 futures also advancing about 0.4%. The 10-year yield was last at 2.84%, a whisker higher in Asia morning trade, but still bruised after falling overnight from as high as 2.9% in early trade on Wednesday. And now Wall Street Bank, Goldman Sachs has already reported rival Morgan Stanley to Hong Kong's financial regulator over a series of block trades or large sales of shares, according to reports from the Financial Times. Goldman Sachs alerted the territory's Securities and Future Commission 3 years ago as part of an informal discussion about price drops in the stocks of a small number of Hong Kong-listed companies that occurred shortly before Morgan Stanley brought blocks of shares to market. According to the report, the U.S. Securities and Exchange Commission was also probing whether financial executives may have broken the rules by tipping off hedge funds ahead of block trades in a February report, citing a source with knowledge of the matter. So far, Hong Kong's financial regulator has also started asking banks about their block trading practices since the U.S. investigations were made public. And looking at the highlights of the Russia-Ukraine crisis now, Ukraine is working behind the scenes to convince Western allies to shift Russia's shipment of natural gas from Nord Stream 1 pipeline to Ukraine's pipeline, increasing Kiev's leverage in its conflict with Russia. That's the latest from the energy officials in local reports, and doing so, they say, would force Russia to move more of its Europe-bound gas through Ukraine. That would make Moscow pay more for transit fees that could help Ukraine's wartime defense and deter Russia from damaging Ukraine's gas pipelines in the meantime. They told lawmakers and President Joe Biden's administration officials in Washington last week. Representatives from Ukraine's gas pipeline operator and gas from Naftogaz spent a week in Washington meeting administration officials and congressional lawmakers to urge them to convince Germany and other allies to adopt the plan. Olga Belkova, director of the International Affairs for the Gas Transit System operator of Ukraine, in an interview in Washington, said Russia depends on them transporting from Russia to Europe, and this is something to leverage in their discussions with them, and Europe can help. On Wednesday, Germany said it will stop importing oil by the end of this year, and then gas will follow, but did not specify when. Germany has already halted Russia's Nord Stream 2 gas project, which was designed to double gas shipments into Germany as punishment for Russia's February invasion of Ukraine. And wrapping up business news now, oil prices on the international market rose today as concerns about supply due to a potential European Union ban on Russian oil came to the fore, days after diminished supplies from Libya rocked the market. Here's West Texas Intermediate crude recorded a price surge of 1.39% to hit $103.60 per barrel. Brent crude now sells at $108.40 per barrel, registering an upward price margin of 1.47%. Bonilite's performance has also bounced back into the green territory today with a price increase of 0.1%, selling at $106.90 per barrel. And for the OPEC basket, crude oil dealers offer $110.50 per barrel, recording a price drop of 0.02%.